Good afternoon, everybody, and welcome to today's EQ Resources Investor Webinar. Joining me are Craig Bradshaw, Managing Director, and Jono Kort, Chief Financial Officer. We'll run through some key operational and financial updates from both Spain and Australian operations, and we'll touch on some governance initiatives and provide a quick outlook on the tungsten market. So we're going to start with Craig. Welcome, Craig, and let's start with the tungsten market. Prices remain strong, supply remains tight, and we continue to see strategic interests globally. Can you talk us through what you're seeing in the market and how EQR is positioned?
Yeah, thanks, Peter, and thanks for shareholders and interested parties and stakeholders for joining the call. Look, the market remains dynamic. The market is certainly tight. I talk to downstream customers, so I have regular calls with downstream customers to understand what's happening in their space. We're seeing, they're seeing consistent demand for their downstream products across tooling, aerospace, defence, the plethora of different industries that the tungsten goes into. The core issue remains that there's a structural deficit in the market, such that there's insufficient supply to meet global demands in the Americas, Japan, Korea, and the EU. And obviously that's the fundamental reason that the price has gone from around $330 per MTU back in February 2025 to last Friday. It hit a range of $674 through to $705, $710. Interestingly, the China domestic price has oscillated between the 700s and the $790, and so that would indicate that there's further room for the price to run. Equally, what we're seeing in the market is significant imports of concentrate into China. They reached record levels in 2024, and as at the end of September 2025, they'd already surpassed the imports of concentrates. So that puts further tightness into the market, and there's no significant new production coming online outside of what we're doing ourselves between our assets. So market's good, prices are good, and we expect that to continue.
What about the benefits from being one of the few Western producers with meaningful scale? Craig, that's got to lean to your advantage as well.
Look, absolutely. The customers want supply chain security, right? They don't want to be worried about where the product comes from. They want to make sure that when they need it, it's there so they can make their product and do what they're good at. And fundamentally, that's where we come in. When you look at global tungsten demand, 150,000 tons a year is the global demand. Half of that is consumed in China, half of that is consumed in the rest of the world. The problem on the supply side is 85% of that global tungsten demand is met by Chinese sources. And the balance, there's 2 to 3% that comes out of Russia, Myanmar, North Korea. There's about another 1.5% coming out of Kazakhstan at the moment, but that's all going into China because that mine is 100% owned by Chinese interests. And so you're looking at roughly 10 to 12% that's available in the rest of the world feeding into that Western demand. And so structurally, there's insufficient supply. And from a EQ perspective, with our asset here in Queensland, in Australia, and our asset in Salamanca, in Spain, we are, if you look at the 2024 numbers, we were the second largest independent global producer outside China. And based on 2025, even though our production is not to our potential at the moment, I think we're going to be the number one producer 2025. As we move both our operations into what they're capable of producing, then I expect to be the number one producer in 2026.
And Craig, having footprints both in Northern Hemisphere and the Southern Hemisphere, that's going to give you benefits for your supply chain to customers as well over other potential competitors.
Yeah, it does. And look, when you look at the two assets, the mine in Australia is a wolframite species, a scheelite. It's very easily recoverable as a result of that. We achieve 80% recoveries. Wolframite is a much easier mineral to process for the downstream. They get better performance or recovery of the mineral to ammonia paratungstate and downstream chemicals from processing wolframite. Equally, the asset in Spain produces a scheelite concentrate. Scheelite's much harder to recover because it's friable, and so it breaks up a lot as you process it. But we're now achieving recoveries in the order of the 60 to 65. With the additional equipment we're installed and the equipment that we are commissioning at the moment, my expectation is that that will continue to increase, and we'll run around the 65 to 68. And then when our operators get much better at managing the sequence of the equipment, then we'll get around the 70, 71s in Spain, which is unique in the scheelite world. Not many people are able to get to those sorts of numbers. But having the asset here in Australia and the asset in Spain gives us a unique opportunity in terms of where our customers are and our ability to feed those customers from both locations.
And just another question on the tungsten markets generally. I think tungsten's the #1 critical mineral on the European critical minerals list. It's up there in the US list and Australia as well. It's all very well and good for the governments to name a critical mineral at the top of the list or put it in that list. How long does it take for that to cycle through into the commercial markets and then demand or focus on production and supply for that critical mineral? Are you seeing anything in time-wise on that?
Look, it's an interesting question. Like the structural deficit that we're seeing is something that's been in existence for near on 20 years. It's not a new thing, right? But if you like, I think the world was asleep at the wheel in terms of the exposure that was created in their supply chains. And from a cost perspective, China was offering material into the market at a low cost. And as a result of that, there was no imperative for anyone to do anything to change their supply chain. And so the reason it's become critical and strategic is not so much from the demand side. Demand runs at around 2.5%, 3% a year, has done since forever, right? The fact that it's critical and strategic is the fact that there's minimal primary supply in the rest of the world because a lot of the mines got shut down through the 30s, the 50s, and the 70s due to predatory pricing by what was coming out of China. China themselves are moving downstream, so they're moving to make products, tools, cutting blades, and that's where they're looking to compete longer term. The quality of the tools and the blades that we see in the rest of the world are still superior in most cases to what we see coming out of China, and therefore for a lot of downstream industries that they'll still utilise Western as long as it's available. And that's the core element as to why it's critical and strategic. It's the availability. And when you look at all the things that it goes into, things like, for example, computer chips, the etching that's done on computer chips is a tungsten hexafluoride, the WF6. The wafers get cut with a tungsten wire. You look at, from a aluminium canning perspective, they're all tungsten carbide punching tools. From a cutting blade perspective, from ground engaging gear, from drills, from a mining, an exploration perspective, all of the tunnels that are getting built around the world in terms of for urban development, for roads, they all require big boring gear. That boring gear all has tungsten involved in it. And so when you look at the use, it's used in a lot of different applications. It's not a big component necessarily of many of them, but it's critical to so many applications, is why from a US government, an Australian government, European governments, it's been classified as critical and strategic because it's essential for industry. Also being essential for defence applications and technology, from aerospace to transport and logistics.
So you set the scene for this wonderful and unique metal for which everybody has invested in EQ Resources for. So let's now turn locally where the metal is coming from, and let's look at Queensland, where night shift has started, material movement is increasing, and the southern wall pushback continues to be a major focus for the company. How are things sitting today at the mighty Mount Carbine?
Yeah, look, Yeah, if you have a look at where we've been coming from, so when Carbine restarted, it was originally restarted as a retreatment plant, retreating low-grade stockpiles and tailings. And that's when I first got involved with Mount Carbine from a Vietnam perspective. I was responsible for a company in Vietnam that built a refinery, and we purchased a lot of the material that came out of Carbine. And so from that perspective, my association with the project goes back a long time. Over the last 12 months, we've got ourselves waste bound in terms of accessing high-grade ore. We've got to move a lot of waste to make that happen. We then had some financial challenges as a result of floods last year, such that we weren't able to move the waste material we needed to move. We've been processing low-grade stockpiles in the meantime. But the focus organisationally since September, and certainly since I started in October, has been on getting the equipment operating to move that 1.3 million tonnes of waste on the southern wall, work our way through the geotechnical fault that existed at the top of that caused issues in the pit. We are through that geotechnical fault. That's been removed. So as a result of that, our mining rates can continue to increase. We moved 200,000 tonnes in October. We are ramping up in November. We started night shift around the 14th of November. That's probably 2 weeks later than I would have liked. Had the equipment, but I need to employ the people, put them through the appropriate training to make sure that they can operate safely and effectively. And that'll continue then to gain momentum through November into December, January. My expectation is that we will be through that waste by the end of January and then into the what we call the 𝘉𝘍𝘍𝘍 vein system. We have drilled that. We know what's there. There's 1.6 million tonnes of 0.26% WO3 material. That's going to process really well. We have processed parcels of that in the past. And so from that perspective, we expect to continue to get 80% recoveries of that when we get it into the plant. But we'll blend in that material with the low-grade stockpile, and that'll be the base feed for the processing plant for the next 3 years. And from that point on, I expect us to perform very well from a production perspective and be able to take advantage of the prices and the demand we're seeing for the product.
Just on staffing and operations too, Craig, how are the local operators going? It must be pleasing to have local operators in the pit, not having to fly people in and out of the operations.
Yeah, look, we took over from an outsourced contractor back at the end of 2024. I think that was the right idea in terms of moving from outside contract to in-house. One of the issues, and certainly in previous operations I've run, I like to own the intelligentsia, right? I like to own the mining engineers, the geotechnical engineers, the blast engineers, because having them on staff, working for the company, wearing your jersey, they're focused on delivering outcomes for the company. And then the execution piece, you can either outsource that or have that internal, depending on what the best available commercial arrangement is at any given point in time. And given the circumstances in Carbine, the best commercial arrangement for us is to bring that in-house. It does lower our cost, but we've got to get all the operators we need in place to take full advantage of that. The other thing I've done since taking over is I'm changing the structure at Carbine and in the market, interviewing at the moment to put in place a single point accountability and responsibility for the site. I'll be appointing that person, a general manager of Mount Carbine operations. And core to me is get the right structure, get the right people in the right roles doing the right things, and then support them and scaffold them to succeed. And that's where we're taking it forward at Carbine.
Fantastic. I think when you've got local full-time workers, you have ownership of that. They have ownership of the operation as well, rather than contractors who probably not as emotionally engaged sometimes. But that's great. Great news to come from Mount Carbine, which is sitting there in your background. Behind Jono is the beautiful picture of the 𝘍𝘍𝘍𝘍 operation. And Spain has delivered a pretty good production result in October, Craig, performing consistently for several months now. So what's behind the improvement at 𝘍𝘍𝘍𝘍, and how do you see that moving into 2026?
Yeah, there's two elements to the success at 𝘍𝘍𝘍𝘍. The first element, and the reason EQ acquired it, right, was the fact that we've got the expertise in being able to process this type of mineralogy. And from that perspective, we took resources out of Carbine, put that together with some contract resources that were then available, that had worked at other scheelite mines in the world, and had experience in terms of building new scheelite mines and making them operate effectively. That expertise was parachuted into Salaro at Barruecopardo and worked through systematically in terms of what was wrong with the plant, what needed to change. The challenge with scheelite is that, in the coarse fraction, you get a 90% recovery. Where it drops away is in your intermediate, your fine, and your ultrafine. And your challenge is making sure that you present the right material to the right part of the circuit for that recovery. And beyond that, then making sure that each of the pieces of equipment that you're utilising can target that. And so that's where, through a combination of installing the sorters remove a certain amount of mass from the rest of the plant. So you get your tonnes per hour per square metre, if you like, down. So you've got more residence time for the separation to occur in gravity, and then making sure that it presents to the right part of the plant, and then having everything pumped and piped to do that. And once you've got it onto into a spiral or a table, that you don't lose it. Equally, we've installed Falcon concentrators, which big shout out to Sepro. They work really well for ultrafine material. So we're targeting material that's sub 55 microns, so 0.055 of a millimetre. That material can be recovered through high gravity Falcon separators. We're running them at Salaro now. We're seeing good recoveries of material within that. We've still got to get that operating consistently. We have some good days, we have some great days, we also have a few bad days. And that's about the operators getting used to operating new equipment and how it works, and then getting the sequence of equipment to work in parallel. And so that's underway. It'll continue to evolve. We'll have more better days than bad days until we get it consistently operating where it can. So that's been good from a process perspective, and that's the IP that EQ in particular brings to the table in looking at these assets. The other was the fact that because we had some financial challenges, we weren't able to, or we had to stop mining in the pit, and we're only processing low-grade stockpiles for a number of months throughout 2025. In September, we went back into the pit with the mining contractor, and we've been in the pit mining fresh ore from the pit since the second week of September. As a result of that, we got good quality ore to the plant through October. And so the other thing that they did give us the opportunity was to clean up the ROM pad so that we got rid of all the low grade that was on the ROM pad. We've now got the space on the ROM pad to have different piles of material as they come out of the pit so that we can blend into the plant an ideal mix, which then gives the processing plant the maximum opportunity to recover the mineral we're targeting. And so as that's working, you're also seeing an ongoing tick up in recovery. But fresh ore from the pit, good grades that we're getting out of the pit, combined with mixing with the low grade, that resulted in record production in October of 12,000 MTUs. And my expectation is, given that we're in that space, we will continue at those sorts of levels. Now, sometimes there's going to be hiccups. It is mining. Things do occur. But ideally, as we move forward, we have plans for that. We have contingencies, and we're able to implement them because we've already thought about it, and we're very proactive in doing that. And so as we go forward, that's the style of management and operational capability that we'll be implementing across both operations, and both operations will benefit from that.
That's a great example of subtle changes having a much bigger impact from that small, thoughtful changes in operation. I'm going to move now to the financial aspect, and we'll put the spotlight now on Jono. And from a financial and corporate perspective, Jono, EQ has been working to simplify and strengthen the balance sheet. Can you give the audience and shareholders a bit of a high-level perspective of what's been going on?
Thanks very much, Peter. I think the last 12 months, as Craig alluded to, we've been under significant financial stress. I think that's well known. And a number of actions have been seen in the marketplace to get us to where we are today. Since coming on board in June, we've really been focusing around solving working capital requirements and resolving outstanding creditors and making sure that we don't get into the same position as we were previously. In parallel, we're cognizant of our leverage in the business, and we do need to simplify and reduce the debt. So a review is underway on capital structures and making sure that we have the right balance between equity and debt that will enable the future of the company. This work is well underway, but it will take a little bit of time to get there. Part of that is, I guess, given the stress that the business was under, a variety of financial instruments were put in place, and it's just working with those holders and working around the timings of those to get the best outcome for the company. Most of the market will know that we've got the Cylora debt facilities coming due in December and January this year. Those facilities are backed by letters of credit with Oaktree. A significant amount of effort has been put into refinancing those. We're in advanced discussions with a couple of parties, and we're also in advanced discussions with Oaktree to make sure we get an appropriate resolution to those moving forward. Another item of significant interest from the marketplace is the US Exim Bank letter of interest of $34 million that we received in June. Just shows great commitment to the business and probably underlines the importance of us to the supply chains into the US and Europe. What I would say on that is we continue to actively engage with the US Exim Bank and Department of Defense for the grant that's out there to progress the due diligence and to get it completed as soon as possible. We are at the mercy of their timeframes and their processes. So it's very hard to give a definitive timeline or indicative timeline. It will take time, but I think when they are ready to progress, we're ready to move at their pace. And then, as always,
So
you go, Craig.
That probably hasn't been helped, Jono, by the US government shutdown. I think some of the people we were dealing with had out of office replies when we were continuing to seek to engage. But I think they're all back to the office as of last week and can then continue to engage.
Absolutely. Obviously, the recent shutdown didn't help us. I guess I was trying to be more politically correct as I work my way through this. But no, look, that didn't help us. There were skeleton crews working, but obviously the work slows down dramatically during those periods. But we're confident that there's support there and that we will get there in the end. It's just a matter of time. And then, as always, with all these actions underway, we'll continue to keep the market up to date as we progress and find the solutions to where we want to be as a business from a balance sheet perspective.
Thank you, Jono. Keep up the good work. And Craig, beyond the two operating mines, EQ Resources has exploration initiatives underway in North Queensland, which is exciting as well. What's happening across the exploration pipeline?
Yeah, one of the good initiatives that the Queensland government initiated was the commercialisation of the abandoned mines in Queensland. I think there's in the order of 130 odd abandoned mines in Queensland. Two of those have been through a process to look to get them re-engaged, and EQR was one of the organisations that stuck their hand up to take on the Wolfram Camp EPM. There is an old mine, or there's a lot of old mine workings there where tungsten mineralisation was poked out the surface, and a lot of the old timers had small pits where they mined that in the earlier days. But is also a processing plant. So it actually ran in operations up to around 2014. It shut down when the tungsten price was around $165 an MTU. Currently it's around $670 an MTU. So we're really looking at that opportunity with a view that when you look at the existing pit shells and apply a different pricing structure, different recovery structure, there's opportunity to do satellite developments there, whereby you crush, you sort, you possibly jig, and you take then an upgraded material through to the Carbine plant with a hub and spoke style operation. There's also, you know, 5 high targets that we've identified for prospectivity that we'll do further work. Ultimately, once we have funding available, we needed to get our house in order in terms of the 2 operations, have both 𝘔𝘍𝘍, 𝘌𝘍𝘍𝘭𝘰𝘳 mine in Spain, and the Carbine operation cash positive. Once your house is in order, then you can actually start looking at where your future development pipeline is going to come from. And we see 𝘍𝘓𝘍 with 5, you know, high prospectivity targets, aside from the existing pits that are there as part of our future development. And we expect to then do that work, or more on the ground work, through 2026. Equally, around the Carbine deposit itself, there's a number of targets that have been identified through soils and some initial exploratory surface drilling that we've undertaken with our blast hole rigs when they're not required for work in the pit. We've got follow-up work to occur there as we have cash come available from the same perspective. You know, historically, the best place to find a new deposit is close to an existing one, and you know, that's no different to what we've got there at Carbine. We've got a number of targets that are near mine that currently need drilling out. Equally at Carbine, only 20% of the resource has been converted to reserve, and so aside from doing additional drilling near mine to convert more resource to reserve, there's also opportunity with the underground. There's been a pre-feasibility study done on the underground. You know, it has a lot of potential. At the moment, you know, indicatively, historically, they looked at bringing that in from about 28, 29. I'm thinking that we'd probably slow that up and only look to bring that in from 2030. 28, 29 wasn't big tons from it, but it's you know, it's got much higher grade than what we see in the open cut. You know, these types of ore bodies, you do see that the vein density as you go deeper. You see more veins, you see larger veins, and as a result of that, it holds more tungsten, and so the grade per vertical meter goes up. And so, you know, the ability to, you know, bring the underground on in future to add high grade feed to a combination of feed from Carbine open cut, 𝘍𝘓𝘍 development, and the low grade stockpile is where I see future. There's other satellite deposits or old mines in the area that we were also interested in, that you know, ultimately we'll develop a strategy. It's a very much a hub and spoke strategy that you see operates today in the goldfields with a number of operations successfully. You know, we're not reinventing the wheel there. You know, we've seen what works in other areas. Tungsten is no different from that perspective. You've got a processing plant that's set up that works really well. Then you bring other feeds in and take advantage of that. We see the same thing in 𝘌𝘍𝘍𝘭𝘰𝘳 in Spain. You know, we've got an asset there now that's working really well. It's in a location that there's a lot of old workings and pits where, you know, old timers between the 1900s through to post Second World War and into the early 50s were mining from surface. There's a number of those that have been abandoned. You know, we're in the process of picking or having discussions around picking some of those up. There's also mines regionally that others have tried to make work that have failed, that obviously we would be interested in, with the expertise we've got in-house in terms of being one of the few companies in the world that has the ability to turn around poorly performing mines or develop mines in the tungsten space. You know, there's very few companies that have done it successfully and continue to be in operation. EQ is one of those now with 2 operating mines.
It's great to hear. Plenty of growth from existing assets, and as you said, only 20% into resource. So lots to come from Mount Carbine as well as Spain. As far as other business development opportunities are concerned, can you give us a brief update on discussions around the Ferrotungsten facility in Vietnam? That's another growth area that the company's been looking at.
Yeah, look, certainly yeah, people may be aware that I spent 14 years in Vietnam prior to joining EQR this year as a non-executive director from 1st of May, and then managing director from 1st of October. And so, you know, there's obviously the 𝘎𝘭𝘆 mine in Vietnam. There's the refinery in Vietnam, which purchases 100% of our production at Carbine. There's also the Ferrotungsten smelter in Vietnam. And from that perspective, we've had discussions with the TNG in terms of that ferrotungsten facility. The benefit for us with that facility is it increases our addressable market and ultimately the number of customers that we can engage with. So when you're selling concentrate in the world, there's a dozen companies that you're going to sell concentrate to in terms of being able to take that material and process it either into ferrotungsten or take it via the chemical route and convert that into ammonia paratungstate, a blue tungsten oxide, a yellow tungsten oxide, or a purple, through into tungsten metal powder, the carbides. And so that 10 to 12 is outside China. There's obviously a number of other companies in China selling into China, but which we don't. But in terms of it, while we're seeing excellent prices in the market today, and my expectation is the runway on those prices are at least 3 years, probably 5 years in all likelihood. And the reason for that is it's not a demand-driven issue that we're seeing in the market, it's a supply-side issue. And from a supply-side issue, to develop a new mine from when you have a discovery today, or even if you're trying to reinvigorate an old mine, it is normally 5 to 7 years on a fast-track basis to get that up and running. And so the way I look at it is that we've got a window of 5 to 7. I'm banking on 3, that at that point, there may well be a tail off in prices. And so well ahead of that, we want to be in a position where we have expanded our addressable market, expanded the number of customers we can deal with, and diversified our sales process so that we've got leverage in future negotiations so that we've got more customers and we're not reliant on that 10 to 12 to underpin our business. Now, ferrotungsten is interesting in that historically you could only buy it from 3 places in the world. You could buy it from Russia, you could buy it from China, or you could buy it from Vietnam. The Vietnam asset's problem has been it hasn't had a consistent feed supply to be able to run continuously to meet the customer demand. Japan's a classic point. They're buying 100% of their ferrotungsten demands from China today. And they don't want to be buying it 100% from China. They want at least 50% diversified away. And ideally, they want significantly more diversified away from a geopolitical risk perspective. And that's where we see opportunity. With the assets that we've got between Carbine in Australia and Baracapado in Spain, we'd have the opportunity to feed our material into that facility and take about 20% of our revenue into a different set of customers with a different margin outlook. So when you're selling tungsten concentrate, you're going to get paid, depending on the impurities, somewhere between, call it 77% and 82, 83. We have had some recent circumstances where we've been paid 90, 91%, but that's because customers got themselves in a significant squeeze, right? But normal market, somewhere between 77 and 83, call it. But when you're selling ferro, you're getting 105, 110, 120% on a relative basis. And so there's significant margin improvement by taking part of our production volume down that pathway. So it diversifies customer base, improves margins, and gives us more leverage in future negotiations, depending on what the price looks like.
Thanks for that 101 on the ferrotungsten and tungsten markets, Craig. That's great. We'll probably move on now to a question for Jono, working on some governance refresh at the moment. It remains a conversation point for many investors, Jono. Can you provide a short update on the government refresh that's underway at EQ Resources?
Yeah, no problems, Peter. I think the best way to look at it is there's two sort of pieces of work underway. One is the broader governance framework and structures as EQR continues to develop and grow and achieve what it wants to. All our business processes and governance frameworks need to move with that. That governance framework, there will be a review underway over the next coming months in terms of making sure that's fit for purpose and enables us to achieve where we want to be. The second piece to that is, Oliver Kleinhampel became the temporary executive chair from 1st of April for a 6-month period, as announced to the market. That was under some significant circumstances where the CEO at the time was needed to step down for personal reasons. And Kevin continues to be a part of the business in a technical capacity. Oliver is an employee of �𝘠𝘕𝑚𝑒T, and that's all well known to the market, with �𝘠𝘕𝑚𝑒T being an off-taker from Carbine. With Craig coming on board as managing director 1 October, Oliver has reverted to the chairman as per se, a non-executive chairman. And the plan is to transition. Oliver's plan is to transition back to a non-executive director role with �𝘠𝘕𝑚𝑒T. In the interim, as we progress forward, we've engaged a executive search firm to support us identify and appoint a new independent chairman that obviously will put their new stamp on the board. I think, as we've mentioned, the last sort of 6-12 months have been very difficult, and Oliver took the reins as executive chairman in the very difficult circumstances, and we're incredibly appreciative of his efforts to get us to where we are today, and he played a vital role in getting new management in place. So that's greatly appreciated by the company. But as the business does grow, we'll be seeking to appoint that independent chairman. The executive search is underway, and we hope to have a solution to that in the next 2-3 months.
Thank you, Jono. Craig, we've had some great interest in this webinar, and lots of questions have been sent through. Just some closing comments from you to the shareholders looking ahead into 2026.
Yeah, I think I appreciate the fact that those shareholders who stuck with us for the journey, appreciate your patience and your persistence in supporting the organisation. And equally, new investors have invested. I appreciate the fact that you've bought into the company and are looking to participate in our journey. I see our role, myself and Jono, as professional management. Our job is to remove the impediments that have existed in the business from it being able to succeed, and for it to be able to reach the capabilities of the business. My expectation as we go forward is that both the Carbine assets, we will have fixed the issues that have been holding that back, and we'll get that in early 2026 into delivering on its production potential. Over in Spain, 𝘍𝑒𝘍𝑒, it's already delivering on its production potential. We just need to entrench that to ensure that it's consistent and that becomes the norm in terms of where we operate. We are fully aware that the Spanish debt has been an element that some shareholders have been concerned about, and rightly so. It needs to be dealt with, needs to be pushed out, so it's more of a term debt situation than a short term. We are in advanced discussions to solve that and to close that out, and that'll be done within the timeframes that we need to make that happen. So, look, I think organisationally we're in a good space. We're probably in the best space the company's been in its short history, and we're building a solid platform and foundation to then grow the company. The market is great. We could sell everything we produce 5 or 6 times over. The price is the best it's ever been, and it looks like it's going to continue to head north. And therefore, it's the things that are under our control that we need to get good at. And that's where myself and Jono, as new executive management, are focused on, to ensure that that becomes the norm as an organisation. So appreciate your patience with the organisation and your persistence, and look forward to better days ahead for shareholders.
Thank you, Craig. Thank you, Jono. It's clear that EQ is moving forward strongly on multiple fronts, including production in Spain, operations in Queensland, and real progress on governance and financial structure as well. So thank you for addressing the shareholders and investors today. To our audience, a recording of today's webinar will become available shortly. We encourage you to sign up on the EQ website and LinkedIn for communication updates, so the company likes to keep everybody well informed. And investor presentation is available online. We've had lots of great questions come through, so if there are that weren't covered in our Q&A session today, please send them through to peter@nwrcommunications.com.au, and I'll ensure that Craig and Jono get those as well. So once again, thank you for joining us, and we look forward to hearing from EQ Resources in the near future. Thank you.
Thank you all. Stay safe.
Thanks, everyone.